All right, what's going on, everybody? It's your boy Crypto Wolf back again, and we're about to do another little how to trade talk. And rather than getting into all the technical analysis and the charts and all that, half of trading is you and me. It's what's in our head, it's how we act, our reactions, and what we do or don't do, and the way we're looking at the situation. In other words, it's the psychology of trading. And before you start getting all bored, I'm going to try to keep this one interesting. It will be. But on top of that, it is really, 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 really important because let's face it, a lot of people out here, especially beginners, I know you're not out here breaking off $1 million trades, not even $100,000 trades, probably not even $10,000 trades. And I'm talking about profit there because you could be trading with $10,000. Doesn't mean you're about to be making it. And the way you are going to get to that pinnacle, that professional level, is you're going to have to treat it like what it is. It's a job. It's a business. And if you notice from our little picture here, and you probably read in the thumbnail, you're wondering what the heck is a crypto sniper? Well, I'm going to get to that in this little speech. I got a bunch of nice little allegories and metaphors and comparisons that go along with it, just to give you an idea of exactly what it is I'm talking about, and that I'm not just pulling this out of my butt. There is some correlation to other aspects of life, other jobs, other skills. And if you want to know how to hone your skills very well, you go look at what other people are doing, even if it's not in trading. But we are going to talk a lot about trading. And this is largely coming from a presentation by a man named Ross Williams. Gave a presentation called Why People Suck at Trading. And it definitely grabbed my attention. I mean, just in the headline, I'm like, okay, all right. What do you got here? What you talking about? And as I watched, it was very good. This guy was a no BS, not holding anything back, said it like it was. And, as much as I haven't been around this for that long of a period of time, I'm sure he's absolutely right. Because honestly, it carries over into other things too. And he is not afraid to say, if you don't want to do these things, then stop right now. Save your time, save your money, save the aggravation. Because if you're not willing to put the effort into it to be a successful trader, to be a good trader, to be professional, then you're just screwing around. And let's keep it real. I mean, that's what it is, and I know a lot of people are out here doing it as a hobby. I know it kind of started out for me as a hobby, especially if you're maybe moving from just investing and hodling over to the trading side of things. But let's be honest about this, that you can legitimately lose all the money that you put into it, and a lot of people do. A lot of people do. A lot of people hang in there after doing that and learn from those lessons, manage to pull themselves back up and get going again. And I've heard from plenty of them where they, say, man, I lost 20 grand, not even like over a period of time, but like built up to 20 grand and blew most of it all in one trade. I mean, it's out there. The stories are out there, and I haven't even looked for those stories, but people will tell you. And the best thing you can do is learn from other people's mistakes. And I know I touched on that last time, but this one's going to be interesting. And on top of that, I have the full outline that I did of this presentation. I'm going to put a link in the description so that if you want to go and grab it, follow along while I'm talking through it, or if you want to grab it after the fact, just to keep it as like some notes, knock yourself out. It's not long and wordy. It's basically just outline format. So it's helpful. You don't have to sift through very much, and it's broken up into basically just a bullet point list. But let's get into it. And I'm just going to run through some key points right off the beginning before we get into like expanded little topics here. And I'm on the ETH 10-minute chart, just seeing what's going on here so you can keep an eye on the chart. Have a little something going on while we're talking. Matter of fact, we'll come down to the 5. We just got done dumping a little bit. As you can see here, man, our Gann square, look at this. Supported off here before finally coming up. Nope. Got support right there. Came back, tried again. We were hugging the line. Finally, just broke to the downside as soon as we got away from that line. So, you know, another props to the Gann squares over there. Working out like it should. But let's get into it. So the very first thing he's talking about is be skeptical, not cynical. And as I'm sure you know, if you've ever been around cynical people, like how much harder it makes it to get through your day. that negative energy is just like infectious and it brings down everybody around you. Well, same thing when it comes to trading. I can't even imagine trying to trade with a completely cynical mindset, you know, and you have people out there that are even generally cynical against crypto and Bitcoin and stuff. Get rid of them. Like, I'm not saying, you know, never talk to them again, but, you know, don't be talking to them about trading. Don't, you know, and just separate the two, because the more negativity you bring into your mindset when doing this, it is not going to help you. You want to try to be neutral, unbiased, no emotion. That's the goal. Anything bringing you down is not going to help. You're going to get more frustrated easily. But the next point here, hardworking normal person will do better than a lazy or complacent genius. And he spent a little while talking about this. I won't do too much, but he's basically saying, you know, most of the people trading or successful traders are not geniuses. They're not a bunch of Albert Einsteins and Leonardo da Vinci's over here, you know, doing technical analysis. It's generally just average people, but I'd say we are a little bit maybe higher on that bell curve, because let's face it, if you have like a sub 80 IQ, you're probably not getting into trading. You're probably not getting super deep into crypto. It is not the simplest field to be doing. Even if you're, you know, especially if you're trying to understand what crypto is and how it works and all that stuff, it generally takes a fairly curious and technical person to really get into crypto and things like that. Now, another one he talks about is, you know, you want to develop a strategy, and that includes, you know, even copying somebody else's strategy, especially when you're starting out. Find something that resonates with you, seems to make sense, you know, and kind of do what they're doing, you know, act as if, as they say. You know, act as if you are a professional trader. What are they doing? Well, I'm just going to mimic them. You know, there is no plagiarism when it comes to trading strategies. And then, you know, most people are really good at coming up with ideas, especially if you're, you know, watching charts, doing a little bit of trading, watching somebody else doing trading, and maybe you're like, oh man, like, you know, I feel like he should go long over here. I don't know what he's doing. Like, I could see this bullish divergence coming back here. And that's an idea. And you start thinking, okay, well, you got that idea. Well, take that and start to work on it. Start to develop it yourself. You know, a lot of people are good at coming up with ideas, but they're not so good at the implementation. How many times you know somebody who has like this great idea for an invention or like a business idea, but never really do anything about it? Or maybe they even like start thinking about doing something about it and just kind of get frustrated, or it just goes to the wayside and nothing ever comes of it. And sure enough, how many times 6 months or a year down the road do you see somebody else ended up having that same idea around the same time, and they put the legwork in, and now they're making money. Now they're doing good. So, you know, you got to put in the footwork, but you want to, you know, take that idea, run with it, you know, test it, you know, go back in the charts, start testing the strategy that you came up with. and then try it out. Start doing some trades. Start small, build up, and then as you're sticking to that strategy each time, just start improving on it. And we'll get more into that here in a minute. But you want your strategy to be consistent and repeatable, because you want to be able to just apply that same strategy. You see, okay, this is dipping down here. Maybe your strategy is, we're seeing a little bit of bullish divergence. You're starting to round off on the bottom right here. Maybe your strategy is to go long when you see that happening. And, factor in a couple other things, go between a couple different time frames, see if you're on like a support level or something, whatever it may be. Even write it down if you have to, but just keep it, do it like they say, trade like a robot. Just have your strategy, stick to it, and just only do that strategy for the time being when you're starting out with it or when you're a beginner. You can have multiple strategies, but keep it simple at first. Stick to that one. Do it, trade, close it. How'd it go? Did you close too early? Did you enter too late? Did it go the other way on you? Why did it go the other way? And we'll talk more about that in a minute. So another thing is there are no easy shortcuts or hacks to make you rich quick. No matter how many YouTube ad videos you see or people popping up on there saying, this one quick and easy trick to make you a crypto millionaire, or, get in on this altcoin gem that is going to go, 10,000% up. Just even, those things do happen, but more people get screwed out of those, hacks and get rich quick schemes. I mean, that's why it's such a famous phrase that, you're better off going the route of, if you really want to do this, gain the knowledge, gain the skills and the experience, and be a freaking professional about it. Try to be the best trader that you can be. Try to be the best trader that there is out there. Set that goal and work toward it. He even says, like, there's a lot of these little quick and easy strategies or hacks. Damn wolves. 2 moving averages crossing is not a strategy. Anyone with an internet connection can tell you that. They can do these little, oh, you get a golden cross, well, just go long. Well, I bet you a lot of people got burnt off the price coming down after that golden cross happened because they just didn't know what they were doing. Yeah, maybe in a super long-term sense, it works out most of the time, but it's lazy. Learn to read the environment and get into the details. Now, that is a big one with, anything you're trying to do well in life. If you are not detail oriented, you're never going to reach that level. It's just, you think about professional sports players. I mean, these guys got everything down to, like the perfect center of balance on their baseball bat, or the way they tape up their stick for hockey players, or the way they like their skates sharpened. Like every little detail, you're always looking for those extra little edges, and those edges are going to be found in the details. Don't get distracted by outcomes. And what that means is, you get into it, maybe you started making a little bit of money here, or you just got dollar signs in your eyes because you see people on YouTube that are, buying nice stuff, and you're sitting here thinking about, like, man, I'm going to get a Ferrari. Like, I'm trying to get that 458 Italia. And you start, like, thinking about the houses you want to buy and all this stuff. Or, like, who was the Cohen dude, you're scheduling your Forbes interview. And you're thinking so much about the outcomes. You're spending that money before you even got it, and you are taking the focus away from what you should be doing right now, which is either, learning or doing your analysis, or being in the trade at the moment and looking at what you should be looking at to execute that trade. So, don't get distracted by the outcomes. Stay grounded in the journey to get there. You know, if it's fine to set goals to have, and eventually we'll do a little video about the whole law of attraction thing, but you know, you like they say, getting there is half the journey or half the fun, or that's, you know, where the real life experience tends to come in. You know, most people will be like, yeah, you know, it's great, you know, that, you know, we're successful now and everything, but you know, looking back at the times while we were on the road to getting here, we're like the golden years, so to speak. And so just keep in mind that you can't live tomorrow just yet, and yesterday's done and gone. You're only living in the moment right now. So pay attention to what you're doing right now. Don't get too hung up on the past or the future, because that future isn't written yet. And unless you put in the work right now, it doesn't matter what the heck you think you're going to do in the future, because you may or may not do it. I could sit on the couch, you know, dream about Lamborghinis all day long. It ain't never going to get me one. See, treat it like a business, you know, is a good thing that he said. And I kind of add in here, you know, in this little outline of notes that I made from his presentation, I added a lot of stuff myself. So it's kind of you know, appended by me a little bit here, but treat it like a business, you know, or a job. And think about what you do when you go to work, or if you run your own business. You know, what's involved in that? Do you just sit down at the computer and start firing off trades saying, oh, okay, you know, we've been going up for a little while. Like, that looks good. I think I'm going to go long right here, and, you know, just watch it continue on to the upside without really looking at anything. I mean, no, you're not just going off willy nilly like that. I mean, if you got a business, you're taking it seriously. You're like, okay, you know, obviously in a case like this, you probably don't have employees to pay, but there are responsibilities involved with that. You're not just winging it. So, you know, come at it with that level of seriousness. And the more serious you take it and the more effort you put into it, the more you're going to get out of it in the long run. I mean, short of just getting lucky, but at that point, you're just hitting the lottery. And what are the odds of that? So don't rely on the fact that, you know, oh, one of these days I'm gonna hit this super huge trade for high leverage and we're gonna be set. Like, it ain't one trade that's gonna, you know, make the rest of your life. It's gonna be all the little trades leading up, all the little losses leading up, and then out of those, you know, small trades, you're gonna catch some of the big fish. But you got to keep, you know, throwing the bait in the water. Let's see here. Develop a bullshit filter and be skeptical. Absolutely. In this day and age with the internet and social media and all this stuff, have to have a skeptical mind, because if you are doing research, I mean, first off, almost any news site at this point, you have to automatically come at it with some skepticism. Got to have your bullshit filter nice and polished and sharpened up, because, you know, most of these places, they're there for money. They don't become successful by making their readers more successful. They become more successful by selling ad space, getting subscriptions. And so I've noticed, especially in the crypto industry, most of the big crypto news sites, you know, you look who the money is behind them, and it's the new crypto cartel. Not going to go into names or anything like that, but obviously they all have their agendas and their biases. So you got to take everything with a grain of salt, and you're better off trying to boil down to like actual data or like white papers or something like that if you're really trying to learn about like a specific project or really just anything. Because most of the news articles, they don't give you enough details anyways. It's just usually just FUD or hype. Pay attention to details. We kind of touched on that one. Act like you care about what you're doing. You know, what are our key price levels? How does it behave on the weekends? How does it usually react to big news, whether good or bad? Uh, when are the key dates that tend to have an effect on the market? Things like the Bitcoin halving. Knowing little things like that, it just gets you more involved. I know, like, one of the big things that I did in order to get myself more involved was I started this damn channel, because it kind of forces me to keep going with it, to keep doing research, keep learning new things, to be accountable. Because, all right, if I'm out here telling other people stuff, I better damn well at least have some idea what the hell I'm talking about. Otherwise, everybody's going to be hitting me in the comments like, dude, you're retarded, for real. And I may be, but you know what? Whatever. I freely admit that I am not an expert in all this, and I'm taking this ride with you. So we're both in the car. Let's put the top down, get the wind through the hair, and have a good time, and try to do it right. Try to be a little successful. That's kind of the point. Trading without a plan or strategy, and not paying attention to details, not going that extra mile. At that point, you're just gambling. That's what it is. And it's easy to gamble in trading. It's easy to gamble trading crypto, especially. I mean, you can sit here and, come in over here and say, oh man, okay, we had a nice little dip over here. Yeah, I think I'm going to fire off a long, and it's going, and it's just a little pullback. I'm betting that it's going to go up, and you're just winging it. You got no TA, no nothing. You got just a blank old chart. And at that point, you're just placing your bet that you think it's going to go up. You think that Holyfield's going to win, but you don't know jack about boxing. And sure enough, it went down. Holyfield got knocked the F out. And here you are losing money. But that's all right. We're going to head up to the crap table again, and maybe we'll try to go along over here and see what happens. And you know what? You are going to have some wins. It's just a fact of life. I mean, you could literally flip a coin on every single trade, and statistically, you got 50-50 odds. Realistically, it might be anywhere from 20 to 80% odds. But all right, getting into the next section of this presentation. I gave it my own little title here, and that's called, you need to get nerdy with it. You need to nerd out a little bit. You want to, if you're trying to do this seriously, if you want to be a professional level trader, it doesn't mean you're doing 9 to 5 or spending all day doing it, for that matter. I mean, I imagine most of us are working a regular job and doing this in the evenings or whenever we can kind of fit it in, especially if you got a family. Man, I couldn't even imagine if I had kids over here. It'd be tough to be doing all this. So being single has its perks. But yeah, get nerdy, and especially if you are still, doing investing on top of trading or in lieu of trading. The guy says start using spreadsheets. And this is something that I really need to get better at. And I've heard it from my mom for as long as I can remember, because she was a high school teacher, and I've helped her do it plenty of times, and here I am, like, barely ever doing it. Like, I did it when I was looking for, new apartments or condos or whatever, back before the last time I moved. I do it every time I got to go car shopping. And I need to bring that mentality into this. And the reason is, you start entering your trade data on there, and it gives you something visual to reference. You can sort, and you can even do little charts and graphs and stuff. But, let me ask this in the form of a question. Do you know how much you're gaining or losing in your trading? Should you reallocate or pay more attention to your long-term holdings? How much you up, how much are you down? Have you just been neglecting it? And as the market tends to take these big macro moves, are you just riding it out, or would you like to have it do better? What's your hit ratio on trading? How many wins to losses have you been getting? What was your best trade, and what would you do differently, or what did you do differently, or was it just good timing? thinking back about all the trades I've done, I mean, I can't remember 99% of them. And if I'm trying to improve on something, it helps to have my previous work or my previous trades to look at and say, okay, well, this is where I was going wrong. This is where I was being an idiot. This is where I was cutting it too short. And even with the investing side, are you impulse buying or are you being more deliberate about it? Because, if you read a news story and you're like, oh man, this is gonna be great for Bitcoin, like I better buy some now. Is that how you're doing your investing, or are you actually like being patient, plotting it out, being like, okay, we've been in this long downtrend here. Even though we pulled up, good chance we may pull back down a little bit and retest a lower level before continuing to the upside. Like maybe then's a better time to be buying for long-term holdings. But by putting all this like on quote unquote paper, it allows you to visualize your performance better, and you can better see the areas that you need to be improving or where you're going wrong. But be a perpetual learner. Work on constant improvement. I know for businesses that I've worked at before who had their ISO certifications and stuff, one of the things that was involved in that was constant improvement. So they, would have paperwork where if you saw something that wasn't working or some area that you could, improve efficiency or something, you write it down and have a little meeting about it. Now, in the case of just, you at your computer, constant improvement would be, learning something new every day, even if it's just something small. If you're learning how to do these Gann squares or how to do the spider lines, or, you're learning market cipher strategies, or maybe you're going back and looking and saying, all right, well, every time like a huge news story comes out about some country adopting Bitcoin, what's the price do? just keep learning, even if you're learning more about the asset class itself, learning more about the various projects, trying to find some good up and comers that'll become blue chip crypto projects, whatever it may be. Just be constantly learning something. I mean, I'm amazed my brain hasn't exploded at this point, because I mean, I'm not even just doing crypto. I'm like, despite being a very outdoorsy, sports, athletic kind of person, I still nerd the F out on stuff all the time. I'll be over here reading like World War II history on top of friggin' quantum physics. And yeah, it's kind of the one bad thing about doing that all the time. And like, I got a whole couple bookshelves crammed full behind me right now, but is you tend to forget a lot of it. So keep that in mind as you're learning things. Maybe do whatever helps you to retain that memory, that knowledge. But moving on to the next section here, and give me one sec. I gotta take a sip of water here. Voice is getting all scratchy. All right. What do we got here? Let's check out Polkadot. Dipping a little bit further, are we? 5.6. Yeah, everybody's pulling back a little bit. Let's see if we come off of this support line. Looks like we probably will. Maybe even wick down just a wee bit past it, given these previous ones. All right, so the next section is critical thinking, specifically not emotional. No FOMO. Don't be doing that. You see it spiking up in a gigantic candle, don't jump in thinking you're about to miss out. Oh, and if anybody there doesn't know what FOMO means, it's fear of missing out. So, just like brain surgery or building a house, you want to have a consistent and repeatable process. Nobody's going into brain surgery just winging it half-assed, like, all right, let's open them up. Looking in there like, I don't know. That looks a little weird, doesn't it? Does that look weird to you? I think we should probably cut that out. That doesn't seem right. Fuck it, let's give it a shot. You know what I mean? Like, nobody's doing that. And you think about just any profession, any professionals, you know, improving efficiency is always the thing. Improving your skills, basically whatever it takes to make more money, to make more profit, to be more successful. That's the plan. Go into trading doing the same damn thing. You know, what is going to make me a better trader? What is going to keep me from messing my own trades up? Because let's face it, I mean, nobody else is hitting the close button on yours. Nobody else is doing a limit sell on your long. You got to hit that button. You're the one who's cutting that trade. And, you know, if you are in a trade from here to here, and then you say, oh, we're pulling back. Okay, we should probably cut it, which... wink, wink, I might have done myself. In my defense, I was only awake for 10 minutes when I did it, but no excuses. But then we start coming back up, and we were hitting like a slightly lower high. I'm like, okay, we'll wait it out. And then it started pulling back. Okay, I go and make breakfast. I come back, and bam. Oh, crap. All right, we're up. And I was an idiot and missed out on that second leg, which was kind of a bummer. But it's a good example of the fact that that was my fault. And you can have more than one process. Again, with, you know, have your process, maybe do your support resistance levels first, then maybe go and do your fib retracement. Maybe throw a little Gann square on there, whatever you like to do, pitchfork, you know, fib channel, whatever you're comfortable with, what you seem to be getting good correlation, good results with, you know, figure out that process, you know, going from the high time frames to the low time frames, whatever it is, but just, you know, keep doing it, get in the habit of doing it. And as you're doing it, find out what's working for you, what's just a waste of time, and improve on it. But kind of got sidetracked on that one. Yeah, try to focus on one of those processes at a time. Whether it be, okay, you know, I'm just going to try to, you know, trade off of reversals. So, okay, if you're working on trading off of reversals, you know, don't just start saying, oh, well, okay, you know, while I'm doing that, I'm going to work on a scalping strategy. And at the same time, I'm going to work on this little VWAP trading strategy. Then I'm going to do my divergence strategy. Like, you start getting all these different ones. All right, now you're just kind of getting back into not having a specific process or plan or strategy at that point. And I'm not saying, for the people who've been doing this a while, this is all perfectly fine. It's more for the beginner that you get this plan, this strategy going, and you just keep improving on it, keep getting better at it, start learning all the ins and outs and every little detail. You get used to, you know, as the price is going a certain way, is it doing what you expect it to do? You know, why isn't it if it's not doing what you expected to do? So then the more you do that, the more you learn what it should be doing in that specific situation. And as you learn those and you move on and do other strategies at the same time, you know what to look for instinctually at that point. Coming back here, if your plan didn't work out, why? Go back and look at what happened, compare it to previous examples of cases which you used to form your strategy in the first place, and what was different between those times and this time. So let's say, you know, when you first form your reversal strategy, you say, okay, you know, every time we kind of do this and we get this, that it seems like I should go long. So you're like, okay, and you've gone back and you've tested it, different time frames, different places in the charts, and it seems to be you know, the case every single time that happens, that it'd be a good spot to long. And then you come in here and it does it. You're like, okay, you do a long and it turns on you. All right, well, now you want to find out what was different this time than those previous times that made me decide to form that strategy. And then you can say, okay, well, next time, you know, when it's coming down, now I know to, you know, look for such and such, know to look for the VWAP coming down early if I'm going long right here. And if that's the case, I should either cut it or, avoid that trade altogether or whatever it might be. Now this is a good one here. So do an after action review. And if you don't know, so military units, when doing a training evolution or an operation, immediately come back and review their performance while it's fresh in their mind. And, they look at what was done right, what was wrong, where was there room for improvement, and what lessons could be learned. The same thing with sports and business and, just about everything. Especially when you're doing things at a high level, whether it be like, Delta Force SEAL Team 6 or something, when these guys are training and going on operations, they absolutely break down literally every step. It is like a ballet of movements and violence. And I'll leave it at that. But so, take that mentality into trading and you're looking at every little detail. Again, like we said, get into the details. And over time and experience, you are going to learn when it starts doing something. When you come up here and you get, 4 impulse waves, you're probably going to start coming down, or just all those little details that really only come with experience. Because even when I was like beginner with this, even with Market Cipher, I just hadn't seen how things played out enough to know what it was going to do. I could say, okay, well, I know that when this goes a certain way, or when this crosses, or when the money flows doing this, that, it has a chance of going this direction. But until you see, because it's never going to be perfectly the same. So you get all the little intricacies, and it's watching and learning over time, gaining that experience, so that you learn how those little intricacies change what's going on. And so, after you finish your trade, go back and look at it, or even let a little time pass and see what it, kept doing after the fact, and go and look at it and be like, okay, so I closed up here. Why did I close the trade at that point? Well, it was starting to turn back. It was looking like this. Things were pointing down. It's like, okay, well, that's kind of reasonable. Like, was it pointing the other direction in like a major way, shift, like saying that, okay, we were getting a big shift to the other direction? Or was it just a healthy, regular pullback and we overreacted a little bit? You say, okay, looking at it like, yeah, maybe I overreacted a little bit. And you take that lesson into the next one with you. Let's see. That's why having a process and a strategy helps. You can see how well you stuck to your plan, how well that plan worked for that specific set of variables and in that environment. And going back to the military analogy here, in sniping, in like long range shooting, extreme long distance shooting, they have something called a dope card or a dope book, and not to be confused with drugs or anything. It's called data on prior engagements. And so snipers and long distance shooters keep a log of every single round that leaves the barrel and all the variables that were present at the time of that shot. And then you can go back through and see that data per given set of variables. And that's kind of what I'm talking about here, about, getting into the spreadsheet a little bit, start, jotting this data down. But just to further the example, get my head ahead of myself here a little bit. So in the case of, say, a sniper, you might be wondering, okay, how much does a 20-mile-per-hour wind on a hot day around 600 yards affect a 168 grain 308 ELD match superformance round with a ballistic coefficient of 0.257? And it all sounds like gibberish, but if you are familiar with that sport or activity, you'll know exactly what I'm talking about here. And you could go look it up in the records of your dope book and see how it performed in the past under that specific set of circumstances. And it's the same thing with trading. You can go back and look at your previous trades at that data and say, okay, well, the last time we were seeing something like this, where momentum was coming up off the bottom, we were below the 60, money flow was kind of coming up a little bit, but RSI was practically down in the dumps and VWAP had already crossed over what happened the last time I started a trade in conditions like that. And it starts to give you a better, historical record of your trades and what was happening in that exact situation. Now, obviously, that is more work than, just hopping on the chart and looking, or maybe even going back and trying to search backward through the chart and find something similar. But if you legitimately are trying to be professional, you are trying to be the best damn trader that you can be, and you are taking it seriously, it's a very good thing to do. Because let me tell you, I mean, if you are being serious about long range shooting and you want to go over to the National Match Championships up there at Camp Perry and you want to compete against the Army Marksmanship Unit, you are going to have that book. You are going to record all that damn data and you are going to look at it. You're going to learn it. You're going to learn your ballistics tables, all that stuff, because you want to be the friggin' best. Now, if you want to be the best trader, if you really want to make that life-changing money, if you want to get that Ferrari and that nice house and a spot down by the beach and maybe, get the ladies coming to you a little bit, then you're going to want to be good at this. You're going to want to stop fucking around, stop wasting your money, stop wasting your time, stop doing dumb stuff that you're just, okay, a year from now, you're going to give up after you threw away 10 grand. If you really are serious about it and you want to be good at it, then do what the best people do. Do what got them to the point of being billionaires. I mean, most of the billionaires from trading, nobody's ever heard their names. But you start learning about some of these people, and they weren't the smartest. They weren't geniuses. The one guy that was talked about in the presentation, I mean, this guy had low ACT scores, definitely wasn't getting into any Ivy League college, just went to some run-of-the-mill college, ends up being a really successful trader, gets picked up by George Soros, not that I like the guy, and literally becomes a billionaire. Nobody's ever heard of him outside of those circles. And it happens. And you don't got to be the Michael Jordan of trading. You don't got to be Tiger Woods. You got to be the guy who's willing to put in the work, willing to keep learning, willing to stick to it, not just give up after a year, not say, I don't feel like doing all that work. That sounds ridiculous. Well, guess what? The people who are going to be getting their Ferrari are the people who are going to put in the work. So, unrealistic expectations if you think you're going to get filthy rich just by coming in and gambling. I mean, it can happen, but I wouldn't bet on it. Pun intended. But yeah, so you can take that data, you can organize it in a way that you can filter by variables to see, for example, how did the price react after coming down for 10 days with a small wick bottom, lower volume, money flow decreasing in the red, and a momentum wave curving back upward at like negative 65 level. And that's actually kind of similar to what I just pointed out. And you can sort by different variables. Say, okay, well, let me sort by, whether the money flow is in the red or the green. You can sort, all these have numerical values. You could go to that point. Or if you just want to generalize and be like, okay, momentum wave was low past the 60, or it was, short up here. However you want to do it, however far you want to take it. You can go into as much detail as you want. It would be more work, but it would also be more accurate. And just disclaimer, don't expect everything to always do the exact same thing 100% of the time. But it would be far more comfortable going into a trade with that level of confidence and having some expectation of what you'd like to see it do. If it starts to deviate too much from that expectation, you're already ready to make a decision at that point, because you already know what you think it should be doing. You know what it's done in the past. If it starts doing something wildly different, but all right, this is getting too far from the plan right now, cut it. And that also works, is just bringing the stress level down, helps taking the emotion out of it, because you're not just over here on a hope and a prayer. Let's see. Yeah, so now you're not just relying on your memory to say what usually happens in a certain situation. it'll definitely help you to learn what happens in certain situations a lot faster than trying to remember it. If you're anything like me, my memory freaking sucks for certain things. It's kind of weird. So our next little section here is becoming a crypto sniper. And what the hell do I mean by that? Well, I don't mean that you should be putting rounds through your computer screen, but you want to learn to analyze with as much precision as you can. Because the difference between, a long distance shooter or a sniper and, Joe Blow out here on the range with his with his grandpa's 30-30 is, one person is being very deliberate, very technical. They are getting down into the details and they are trying to put that round in a very precise spot, as close as possible to where they're trying to put it. Whereas the other guy's just, aiming at a 2x3 foot sheet of paper. And so with trading, they say aim small, miss small. And the more you know about the upcoming support resistance levels, oh damn, I lost my spot, the more precise you can be with your trading. So, if you are, drawing out all these indicators and technicals and you're watching it come down and, say you got your spider lines and you're like, okay, you have some expectation that, all right, something may happen here. This might be the next level. Maybe draw a horizontal out from that. It's fairly close to this. So you know to expect something to be happening when you get around this level, when you get around this level. If you got other stuff going on, right here looks like we're rolling over. 1, 2, 3, 4. But you can be more precise about your entries, your exits, profit taking, whatever it may be. It's not just happening and surprising you. Another one I'm kind of stealing from the shooting analogy is, one shot, one trade, which I'm not going to say what the normal thing is. You probably heard it before, but all that matters is this one trade. Any previous or future actions are irrelevant, completely irrelevant while you are in that trade. Now, I'm not saying you shouldn't remember your data from previous trades or how the price reacted at certain times that you learned from the past, but it doesn't matter if you just lost $100 on your last trade and you're going to be short on your car payment and you're freaking out. So you have to make that $100 back before you go to bed. That's what I'm talking about. Forget what you just lost or what you just made. Go into that trade the same way every single time. Go into it like that's the only trade you're doing that day, the only trade you're doing this year, and the rest don't even matter. Your same risk management, same enthusiasm, same drive to have the best trade that you can have. And again, just, be trading like a bot, trade like a robot. Try to take the emotion out of it. Don't let it sway or bias the way you look at it, the decisions you make, nothing. Now, another one is don't get tunnel vision. And, when you're staring down a scope with one eye closed for extended periods of time, you tend to lose track of everything else going on in the world around you. And your world just becomes this tiny little circle of focus, downrange wherever you're looking. And you tend to miss the big picture. You miss things that might be happening literally right next to you, which can be dangerous in the case of, a sniper overseas or something like that. And the same thing's kind of true with trading is you also want to be aware of the environment and the trends that are going on around the area that you're trading. Like if you're down here, you're on the 4-minute and you're like, okay, we're kind of doing this. Seems like, we've been in a big downtrend, but you come back up to the 6-hour, after staring at those small time frames forever, and you forget, well, we've been in a generally bigger uptrend with higher highs from the previous. So you know, it's a different way of looking at the situation between the two. So you just, you know, when in doubt, zoom out. Just keep an eye on the entire environment. Don't just get tunnel vision down on the 1 minute or sub 1 minute for that matter. Right. You know, I kind of added this one too a little bit. So, and just coming back to the crypto sniper analogy here, you know, would you rather be like the random jihadi who's reaching his AK up above the wall and just blindly firing off into the distance? Or would you rather be like Bob Lee Swagger, you know, taking a precision shot from a position of relative safety away from all the chaos? I mean, it's a pretty clear choice for myself, but, you know, I want to be the one who's not stressed out. It's not worried. I'm sitting here, I'm focusing on, you know, the very specific details, the technicals of executing this trade. And I'm not worried about, are we in a bull market or a bear market? You know, are we reaching the all-time high? I'm just looking, all right, where are we heading right now? Are we starting to turn? You know, where's our support and resistance coming up? You know, that's what I'm looking at while I'm in a trade. You know, do I have like a preset area that I'm expecting a potential reversal to come maybe? Like that's all I'm looking at while I'm in a trade. And then when the trade's over, okay, you know, then we could be happy about the money we made. We could start, you know, coming out and looking and being like, you know, okay, overall, like, yeah, it seems like maybe we're gonna reverse and turn around over here. You know, might look at being in a longer swing trade. You know, because the longer the term of the trade that you're doing, yeah, you are going to zoom out more and you're going to worry a little bit more about, you know, larger trends and macro directions and stuff, but it's also a little bit more forgiving because you have a lot of time in between opening and closing that trade. And moving on to the next section, this one's a little bit shorter. Eventually I'm going to do a video specifically on this, so I'm just going to go through this one quick. That is risk management. Now, that would be avoiding losses and mistakes. And you want to keep in mind, you know, you're not just avoiding all risk, but you're taking calculated ones. You're taking calculated specific risks. Oh, sorry, I got to stand up here for a sec. And also keep in mind that the biggest risk is not taking any at all. Because let's face it, I mean, if you take zero risk at all, imagine what life's going to be like. You're not going to ask that girl out on a date, or you're not going to walk up and say hi, or, you know, you're never going to enter a trade because it never looks just absolutely perfect. It's not the perfect time to get in, or maybe you're a little bit late and you miss the reversal. Sometimes you just got to go for it. Life isn't always going to be perfect timing. And, you know, I've heard people in the past say, you know, there's no such thing as perfect timing. There's just right now. Now, I'm not saying, you know, jump in willy-nilly, but I'm saying you don't got to hit it, you know, on the very, very bottom of the wick and then get out on the very, very top of the wick. But knowledge is the best risk management because you're learning what to do when things go wrong. And what's next here? Develop a process so you can make decisions with the least number of errors. And no process equals no plan, equals no risk management, which equals hope as a tactic. If you watched the previous video about conquering fear, I talked about the hope as a tactic thing from that movie Deepwater Horizon. Great scene. But in the end, nothing trumps experience. And let me be clear on this one. Paper trading is not the same. Experience, paper trading, or a practice account where you're not using real money is not the same. You know, it might be okay for learning how to, you know, operate the exchange itself, how to execute trades, how to set and move your stop losses or limit orders or anything like that. But when you're talking about actual trading, it's not until you have real money on the line that the emotion starts to come out and you start to get nervous or you start to get more excited. And that's what you have to learn to conquer and try to eliminate from your decision-making process. And you're not going to be able to do that with fake money. Not to be confused with fiat money, which is still kind of fake, but I digress. All right, on to the next and probably the longest section. So I'll try to get through it quick. I know this video is getting long. I'm half tempted to split this up into two. I'll do it. If nobody watches the second half, maybe I'll split it. But the next one is emotions. So numbers don't get happy, sad, or angry. So he says, stick with the numbers. Now, traits of emotional traders. Basically, traders who are allowing themselves to be ruled by emotion. One would be, can't be bothered to explain their knowledge or process. Another one would be, they cling to certain ideas even when they're wrong. They refuse to look at anything that might show them they are wrong, also known as willful ignorance. They are unable to accept criticism and hostile to new ideas. They only want information that confirms their own biases, and they're oftentimes in denial of their profitability, meaning they will not admit to people or even to themselves that they are hemorrhaging money and doing terribly and should really do something to change that. Oftentimes have a fear of change and of accepting change, and always tend to blame external factors for everything they do wrong. And I'm absolutely sure if you know anybody else who is out here trading, I am sure you have known or heard or seen somebody on YouTube or people in the comments especially that will blame their losing trades on something else, whether it be market manipulation or an Elon Musk tweet. Oh man, yeah, tell me about it. I'm sick of hearing about all that stuff. You know what, dude? You're the one doing the trade. You're the one with your hand on the mouse. You're the one clicking the buttons. Got nobody to blame but yourself. Traits of reasonable and objective traders would be, willing to debate and consider both sides of an argument. They're adaptable. They will analyze their performance rather than complaining about it. They accept their mistakes and criticism and are generally more profitable. And, and these two lists don't just apply to trading. I'm sure everybody knows people that fit some of these qualities, especially when we get down to like politics or culture or something like that. But that's a story for another time. Now, if you see any of these traits in yourself, work on them, get rid of them. If you don't see any of those negative traits in yourself, you may be the first wave of Skynet robots getting ready to infiltrate the world and kill everybody. So seek help immediately. I'll just leave it at that. I mean, you're probably not human at that point. Because let's be honest, I mean, everybody, myself included, has done some of this stuff. All right, so these traits are not only holding you back in trading, but they carry over into life as well. So just keep that in mind because everything's interrelated. If we're talking, politics or the recent health stuff going on. I mean, God, now we all know people who refuse to even consider anything beyond what the TV tells them. Just saying. But when it comes to like the clinging to bad ideas, how many people are still trying to push assets that haven't been doing anything, haven't been doing jack for years now? I could think of a couple. I'm not going to say it because I'll probably even piss off some of the people watching this. But, they refuse to let go of them and go on to something better. And I'm sure there's one in particular that I can name. And even though I happen to like this particular asset and I think it's a good hedge against inflation, it has not been doing jack for a long time. But, another one here is, people often refuse to accept that they're losing money while they're actively losing money. It's just an interesting thing. It comes back to that last video with, pain avoidance, where our brains literally just block out negative things because we don't want to experience the pain of admitting that, okay, we screwed up, we're doing terribly, maybe we should stop. Another thing to keep in mind is markets continuously evolve. So don't refuse to accept that the same thing is going to happen now as had happened in the past. An outstanding example of this is the Bitcoin cycles, the bear and the bull cycles. I found it very odd that leading up to this last September, so many people were like, okay, the peak's going to be in September because the last cycle was X amount of days or weeks. And the previous cycle was, or like 2016 was so many days or weeks. And there were a few people out there, shout out to Into the Cryptoverse, who was showing all the cycles overlapped on the same chart. And there was a clear trend of diminishing returns and extending cycles. And I'm like, yeah, no, that makes perfect sense to me. Like each cycle was getting a little bit longer and the return on investment was getting a little bit lower because as the price goes up, the percentages get smaller. So I'm like, yeah, that makes perfect sense to me. So I'm like, well, we'll see. I'm like, it'd be nice if we went to a blow off top in September, but I honestly didn't think it was going to happen. And then what we were seeing with the market cipher and the bearish divergence, it was clear as day. But, barking. Everybody likes to say, past performance is no guarantee of future profits or future performance. I prefer to say future performance because, there's no guarantee of profits really for anything with trading. Technically, you never know what's going to happen, and there's always the human factor. You can screw it up, or everybody else can screw it up, and maybe you get lucky. Probably less odds on that one. Next section. Taking calculated risks is the only way to create wealth in a zero interest world. This was kind of an interesting little bit that he had in there that I'll kind of rattle off to you real quick. So if you put your money in a bank account, what is your real interest rate earned? And I'm sure if you're watching this, you're a fan of crypto. And part of that reason is probably because you do not like the traditional system. You don't like our existing centralized banking system. But here's something for you. So there's a little bit of a formula. Nominal rate minus inflation rate minus the tax rate. So that would be your real earned interest. And he says that in the US, it's between 0 and 0.25%. And that was 2 years ago. And I'm sure all of us know what's been going on for the last 2 years, not to mention the rapid increase in inflation. And so I would argue that we are probably part of the negative percentage club at this point, like, much of the rest of the world was even then. And so it is literally costing you money just to leave it sitting in the bank. Meanwhile, they are using your money to make more money for themselves. So why shouldn't you be using that money to make yourself more money rather than giving it to them so that they could play with it? Or at least, at the very least, to counteract the rising inflation that's basically shrinking everybody's savings day after day. And the opportunity cost of not doing something is simply just too large to state at this point, because leaving your like, and I'm not saying to just, cash out your entire savings account and throw it into Bitcoin. Not saying that at all. What I'm saying is at this point, just leaving it there is taking away from what you have. Because as you know, everybody knows inflation is a hidden tax on savings. So even if you diversify a little bit, or you put it into something that's a little bit more of a hedge against inflation. Now, obviously, crypto is a little bit more volatile, so your life savings, it depends when you're getting in on it, whether or not that's a good idea. But obviously, there are times in Bitcoin where literally everybody who had ever purchased prior to that day was in profit. But that doesn't say too much about the people that literally bought one day before that and then it went down. So you got to be realistic about these things too. But it's just something to keep in mind. The world we're living in at this point, just leaving it under the mattress or leaving it in a bank account, while it might seem like a safe idea, it's more or less this like cultural thing that has just been ingrained into us largely by the banks themselves. And that's why I'm a big proponent of taking control of your own finances. Take your own financial future into your hands, but gigantic disclaimer, be responsible about it. Be very deliberate about it. Back to the be professional, look into what you're doing. Don't just drop every penny you have into one thing because there's a bunch of hype surrounding it. And I'm not saying that's what Bitcoin is. I'm just saying plenty of people have done it with stuff and got wrecked. Where were we here? So paper trading is not going to secure you or your family's future, nor help pay the bills. So you gotta do it. So, if you want to practice, set up an account, throw $100 in it. Buy, $100 worth of stable coin, transfer it over to one of the exchanges, and take off. I think Bybit has a whole bunch of USDT pairs, so you can send some Tether over there and start practicing with it. Don't start out trading the entire $100. Don't start out at 50x leverage, 25x leverage. Be realistic. Listen, people say that they usually only do like 2% of their account per trade, and then whatever amount of leverage. Yeah, you're not going to make very much profit off of 2%, like $2, doing a $2 trade at like 10x. I mean, it's only a $20 trade, but you're going to learn, and the actual numbers there are irrelevant. You're doing it so that you learn how to trade, not even necessarily to, make a ton of money. And on it, like, and over time, yeah, you get up there, you start doing, $80 trades with leverage after you start building that account up. I think that's the last place my practice account was. I still keep it just to try out new things, or if it's like a high risk situation or just seems kind of flaky. I mean, shoot, I still have mine, and I'll pop off little $80, $100 trades all day long. And that's the best way to start training yourself, start getting experience, learn to deal with the emotions of trading. Let's see what Luna's doing. What's Luna doing here? I'll hop out of this 10-minute. Oh my gosh, look at that. Oh my gosh. It just continues to go up. Look at that hit resistance at that little level that we drew. That's interesting. Interesting. Candle bodies came right to that level too. Huh. But all right. Last section. Making money trading. Because that's what we're all here for, right? So you will form habits one way or another. If you keep trading, you're going to form habits. Such is life. What you want to do is form the correct ones. So you will not become a hashtag lossaholic if you learn how not to suck at trading, which is kind of the point of his presentation, and the point that I'm making with this video is I want to not suck at trading, and I want you guys to not suck at trading. I mean, there's no money in it for me, like making this video, but I legitimately would like to help other people while at the same time it helps me. Win-win. I mean, the money I'm trying to make is in the trading itself, not off of YouTube. But avoiding bad behavioral traits is more important than being a genius. And if you are a genius, avoiding those bad behaviors will make you even better, I guess, won't it? But to be honest too, you got to be careful when you're, when you know you're the, like a little bit smarter than usual, and you can actually kind of get yourself into a little bit more trouble because you're overthinking things. So be mindful of that too. But adaptability keeps good traders in the game. If you are able to adapt to, changing markets, changing trends. For a while there, we had a little bit where things were like, pumping and dumping on the weekends. Now we're in a situation where things have been going kind of sideways over the weekends a little bit. Not really the chart that we're looking at right now, but generally kind of sideways action here over the weekend. Did have a little run up. Now we got a little run down. Yeah, harmony ain't looking too bad. Okay. Be wary of the quote unquote expert that tells you that things never change, or quote unquote, this is how the market just trades. They are commenting on the past, and it's usually, you're going to have some dude who's been doing it forever, or somebody who's been around for, 3 years and thinks they're an OG. And they're going to say, oh, well, this is what it always does. This is what always happens at such and such time, every time of the Bitcoin halving, it always does this. It doesn't matter. It just doesn't matter what they say. You're doing your analysis. You're checking it out. And even still, you see what it's done every other time maybe, but you want to go into it without that bias that, oh, it's for sure it's going to do this again. It does this every single time. I swear, as soon as you start going into it like that, watch, it's going to do the opposite. So just go in open-minded, play it minute by minute. Profitable traders focus on the future. Adaptable traders are open to change and to changing their mind. Let's see. Most people are better at the idea generation process than they think, but struggle in the implementation. Education is the key to developing a workable process. Accepting that a, quote, one easy way or quick hack doesn't exist. Accepting that you have to do it, because with no action comes no results, or at least no good results. Just watching this and trying to learn more means you're already ahead of most people, and if you start implementing some of these lessons, then you're likely going to be ahead of like 99% of other people, because regardless of what it may seem like, especially going through YouTube videos and tutorials and stuff, and you see, oh, there's a lot of people watching, there's a lot of people commenting, a lot of people doing this, a lot of people in the Discord groups and all that kind of thing. But fact of the matter is, there's way more people in the markets, way more people trading, and most of them don't have a very good idea what they're doing, or are just constantly losing. They're flopping and groping. That's what you don't want to be doing. You don't want to be like them. You want to be like that 1%, to 10% that are the professional level. They're the the guys everybody looks up to, the ones that, if they say something, some website or a news paper or news site is going to be quoting them. don't pay attention to the blowhards. You know, Kramer, the people on TV, all of them, completely irrelevant. There's money behind them, nudging them in certain directions. But, you know, some of these guys that have been doing it forever, you can definitely learn a lot from them. But at the same time, you know, never take anybody's word as gospel, including myself. You know, go in, do your own analysis, do your own research, even though I know that's technically a bad thing to say nowadays, according to CNN. But as for us, you know, we're the wolf pack, chilling in the wolf den. And I haven't been saying it enough, but it's on the original channel page. Real alphas take control of their future. And if you're an alpha wolf, if you're an alpha dog of your pack, or you want to be, take control of your finances, take control of your future. Because you're the one who's going to be walking it. You're the one that's in your shoes. You can literally try to do anything that you want to do, but you got to put in the work. You got to learn how to do it. And you have to physically get your ass up, get in motion, start doing it. I mean, nobody's going to drag you, you know, through trading and then sit you down and say, okay, well, you know, I forced all the knowledge into your head like the friggin' Matrix, like you were sitting in the chair with the thing plugged into your neck. Now you're great at it. And we don't really have those, what's that little clear pill from the movie Limitless, I think it was, that makes you like a super genius, even though you get crazy addicted to it. Yeah, don't got that either. So you know what? You're just going to have to do it the hard way. But, you know, nothing worth keeping ever came easy. God knows that's the truth. All the stuff that I've worked up hard to get came the hard way. All the stuff that I got the easy way, well, maybe not all of it, but most of it is not here anymore. Funny how that works out. But all right, guys, let me know what you thought. Thank you for coming to my TED Talk. Sorry for going on too long. It wasn't too bad, hour and 17. So for a minute there, I thought this was going to get like hour and a half, 2 hours or something, but didn't have much in the way of graphics or slides or anything. But again, if you want, go down into the description. I got a link to the outline. It's definitely more succinct and shorter than me running my mouth, because I pretty much just, you know, expanded upon every single thing that's on that outline. But hey, do some of this stuff, be a nerd about it. Try to be the boss, dude. Be professional. Try to be the man. Try to be the best trader. Be the one that you get so damn good, everybody's coming to you asking, dude, what are you doing? How do you do it? What's your price prediction? All right. Later.